Hello, good morning, good afternoon, and good evening. Welcome to the second day of the BIS Innovation Summit. I'm Agustin Carstens, the General Manager of the BIS, and I'm delighted to welcome four very distinguished central bank governors and panelists. Noor Shamsiah Mohd Yunus, Governor of Bank Negara, Malaysia, J. Powell, Chair of the Board of Governors of the Federal Reserve System, Andrew Bailey, Governor of the Bank of England, and Joachim Nagel, President of the Deutsche Bundesbank. Thank you all for joining us. Well, we're living through an era of unprecedented change in the financial sector. A great deal of attention is being devoted to such emerging trends as the role of big tech in finance, decentralized finance or DeFi, and new forms of private digital money like cryptocurrencies and stablecoins. These changes affect all of us, but particularly they raise challenges for central banks. Central bankers are working hard to understand these changes and to decide how to respond. They are looking at the implications of these changes for central bank mandates, regulation, and the role of central bank money in the financial system of the future. So I'm truly delighted to have the opportunity to ask our panelists how they view these developments and how they believe the central banking community should respond. I would like to start with a general question for all of our panelists, and each one will answer. They will have its own slot to answer this question. So the question is, amongst the important trends that are reshaping the financial system, I mentioned the growing power of big techs, the rapid rise of DeFi, and expansion of cryptocurrency markets. So the question is, which developments do you believe offer the greatest opportunities for the financial sector, and which of these may prove to be the greatest potential sources of risk? So with this question, and well, of course, this provides plenty of room to elaborate, let me start with you, Jay. The floor is yours.
Thank you, Agustin. Thanks for bringing us together, and hello to my colleagues. It's nice to see everyone. So as you pointed out, there is no question that we are in a time of rapid technological change in the financial sector, especially in payments. And as is often the case at times like this, there's a mixture of innovations that will have lasting and perhaps salutary effects, and those that will turn out to be mostly hype. And it's never possible in real time to be sure which is which. More fundamentally, innovation is the key to driving productivity in the economy, and the Fed has long supported responsible innovation. Novel technologies like distributed ledger and decentralized finance have the potential to increase the efficiency of the payment system and encourage a more competitive financial landscape. So the direction of travel is encouraging, and the future we can now imagine is one featuring ubiquitous real-time payments delivered at extremely low cost. It's also easy, however, to see the risks. Our existing regulatory frameworks were not built with a digital world in mind. Stablecoins, central bank digital currencies, and digital finance more generally will require changes to existing laws and regulation, or even entirely new rules and frameworks under the principle of same activity, same regulation. From a consumer protection standpoint, users may not fully understand the extent of their potential losses, or that these investments generally lack the government protections that accompany many of the traditional financial instruments and services that they're used to. There also are potential financial stability concerns for some products. In particular, we don't know how some digital products will behave in times of market stress, which could lead to large destabilizing flows, nor do we know how stresses in crypto markets could potentially spill over into the traditional financial system. Moreover, crypto assets have been used in some cases to facilitate illicit activity, and we need to prevent this so that the innovations that do survive and that do attract broad adoption are those that provide value over time for legal use cases. All of these innovations have made central bankers think critically about the intersection of money, payments, and technology and about the role of central banks in the economy. And that is why we at the Fed recently issued a discussion paper on the future of money and payments. The paper is intended to be a first step in fostering a broad and transparent public dialogue about the future of money, and we look forward to receiving ideas and comments from a wide array of stakeholders about what the future of the financial system should look like. As the paper notes, we are actively examining potential use cases, benefits, costs, etc., risks of a central bank digital currency. And while we haven't made any decisions over whether we will eventually issue a dollar CBDC, or what the underlying technological design of one would be, we did outline 4 key principles that are currently guiding our thinking. The first is that a CBDC will need to ensure users' privacy. So we're researching technological and policy options for a robust privacy framework. At the same time, a CBDC would need to be identity verifiable in order to prevent money laundering, terrorist financing, and other illicit activity, just as banks and other financial institutions currently comply with such rules. We also foresee a CBDC in the United States being intermediated so that it can leverage the private sector's ability to innovate as well as the private sector's existing privacy, identity management, and AML frameworks. An intermediated CBDC would also lessen financial stability risks that could arise from disintermediation of private sector providers, where financial services also provided by the government. Fourth, and finally, a CBDC would need to be able to serve as a widely accessible means of payment for all transactions, meaning it would need to be seamlessly transferable and between customers of different intermediaries. In any case, digital innovation in the financial sector is here to stay, and we are clearly only at the beginning of this journey. Thanks.
Thank you very much, Jay, and you have raised very important and interesting issues, some related to how fit for purpose is regulation to the developments on the digital world. At the same time, this is due to the fact that regulation was not drafted having in mind this digital world, issues related to consumer protection, and it's very interesting the key principles or pillars that are contemplated in the CBDC document that was just raised on privacy, identity, intermediation, and transferability of the CBDCs. So this is a very interesting, good start. Let me now pick your brains, Joachim. The floor is yours.
Augustine, and thank you very much for the chance to participate in this panel discussion. Let me make some remarks here. Generally, I think that most of the developments are for the benefit of customers as well as the providers of financial services. Take, for example, fintech and big tech companies that introduced new financial services. Established financial institutions had to adapt their product portfolio accordingly. Now most of them provide comprehensive mobile banking services that allow customers to conduct financial transactions using, for example, mobile devices such as smartphones or tablets, wherever they are. Banking is much more convenient for customers in these days. Likewise, the emergence of crypto tokens and the introduction of distributed ledger technology have opened up many opportunities. In particular, DLT allows for innovative applications at the interface between the financial and the real economies, and then also with programmable payments, completely new business models with fully integrated supply chains become possible. Digitalization can also help us to tackle climate change. I guess this is very important in these days, and also climate policies, which is becoming more and more important. In order to determine the right measures, we need a solid database of climate-related financial data. Digital technologies such as artificial intelligence or, for example, process automation enable us to gather and analyze the relevant data in a cost-efficient way. And finally, the digital transformation also allows us to improve the way in which we work. Central bankers are making increasing use of these new digital tools to free up time. This is just some of the potential offered by digitalization. However, the aforementioned developments also create risks. The effects of the progressive expansion of crypto assets are not yet clear. In particular, the substitution of traditional banking services by non-banks could affect the stability of financial institutions and possibly the banking system as a whole. It could also influence the transmission of monetary policy, our main task. Moreover, we have observed that digitalization can change competition because platform markets established by big techs tend towards markets concentration. This increases barriers for new market entrants and can lead to de facto monopolies. In effect, firms would be able to dictate higher prices and increase profit margins at the expense of consumers. Policymakers and antitrust authorities are required to adjust their competition policies to these mechanisms and preserve competition in the digital age. In that context, regulatory policy should also ensure the protection of personal data and ultimately strengthen consumer sovereignty. We as central banks need to share our expertise in this discussion. Finally, financial ecosystems and operational networks are becoming increasingly complex and interconnected. This comes with a higher risk of cyber attacks, for example, which can disrupt financial market infrastructures or systemically important institutions. Such events could lead to operational outages or excessive volatility on the financial markets. As a result, this could also undermine confidence and trust in the financial system, which would put financial stability at risk. Therefore, central banks and supervisory authorities need to address cyber risks in order to ensure financial stability. And I guess we will continue to engage in these discussions about how we deal with this situation and the current regulatory framework, and how does this influence the financial industry of tomorrow. Thank you, Augustin.
Thank you very much, Joachim. You raised the interesting comments, mention of programmable payments and its impact on value chains, how innovation in digitization can help us in the combat about climate change. But you also pointed interesting, important risks, like it's not clear how crypto assets can affect the transmission of monetary policy, the competitive environment in the financial system, and different cyber risks and their implications for financial stability. So thank you very much for this contribution. And then let me now give the floor to Andrew. Please, Andrew, the floor is yours.
Well, thanks, Augustine, and thank you for organizing what is a fascinating panel and fascinating session. It's a very important time. I really sort of in the spirit of what Jay was saying, I do start from a very firm principle that it is not for us as public authorities to stand in the way of technological change and its impact. There's a famous story in British history going back 1,000 years of a king, King Canute, what we all learned at school was that he had his throne put on the beach and he sat on it to prove that he could stop the tide coming in, which of course he couldn't. The modern interpretation actually is that he did it to prove to his followers that he didn't have the power to stop the tide coming in. His power was limited, and I think we all have to remember the limits of our authority. So what are we here for, in a sense? Well, we're here, I think, always to understand very well what innovation is, and then extract from it where the public interest lies, what it means for our public interest objectives, and bearing in mind that our public interest objectives are unchanging at the highest level. The central banks, our public interest objectives are the stability and value of money and the stability of the financial system. Now, so we have to say, well, how do these things, impact on that? And just to pick two examples that you've already pointed to, Jay was talking about central bank digital currency. we've got a system, we've developed a system which has, within the what I tend to call fractional reserve banks, combined the various purposes of money. So money as a medium of exchange and money as a store of value. We can all do that through our bank accounts, and it's combined. And these institutions are also performing another important public function, which is, of course, lending to support the real economy. Now, so this innovation clearly, poses a threat to that system and could start to break it up. And it could be efficient in one sense to do that. What we have to do is understand what, in a sense, the consequences of that are for our objectives, both in terms of the technology, but also the economics of it. If we start to sort of break up the functions of money and we have sort of institutions that are more dedicated to money as a medium of exchange and separate it more out from the store of value, what does that imply? As Jay was saying, in the context of central bank digital currency, if we shift the mix of central bank money and commercial bank money, to use the old Milton Friedman terms, inside-outside money, what does that mean for the financial system? And so the Bank of England, we're devoting a lot of time to understanding the consequences of those, not because we reject them, but we need to understand what they mean for our public policy objectives. And just the final point, I'll just make the same point on decentralized finance. One of the things I think is critical in decentralized finance is I'm trying to work out what it is as well, is that it appears to be saying, well, let's take all the innovation in artificial intelligence and apply it into the world of financial contracts. Well, that's a good and in some sense inevitable thing. Then we have to work out, well, what does that mean for our world? Where we're, for instance, trying to impose a public interest or ensure a public interest of consumer protection. And we have to do that by putting obligations on controllers of finance. What does this shift towards using artificial intelligence mean for our ability to pursue that objective? So the first thing I think, Augustine, which I think we're well engaged on, but it's a constant challenge in a sense, is to understand all the implications of all of this for our public interest objectives. I'll stop there. Thank you.
Thank you very much, Andrew. You also raised very fundamental issues in all this quest to incorporate the innovation into the financial system and the services that central banks provide. Very important to remember this king cannot experience or tail, so that we just need to face the major wave of innovation that will not stop. You also underlined several times the importance of not losing sight of the public interest in all this development and how this should shape the role of central banks in this regard. Also, to ask, I think it's very, very clear what you said. To figure out the economics of CBDC. That's also very broad. It has many different ramifications, and definitely we'll need to see CBDC as those models that rotate 360 degrees, and we need to look it from everywhere. And also, as others, as Jay mentioned already, the importance of consumer protection. So to complete and round this I would say, a high-altitude view of challenges of central banks, opportunities and challenges of central banks in the relationship between innovation and financial market central banking. Let me give now the floor to Shamsiah. Please, the floor is yours, Shamsiah.
Thank you, Augustine, and thank you for this invitation to be part of this panel. Yes, we are in a very transformative period for the financial sector, powered by technology and innovation. And as what the other speakers have said, the opportunities are manifold. But if I had to choose, there are two developments which in my mind offer the greatest opportunities, especially for emerging economies. And the first is the accelerated creation of new digital-first business models, While this trend is not entirely new, momentum has picked up tremendously, driven by the entry of non-traditional players, including fintechs and big techs, and the digitalization of incumbents. With more digital-first players comes a host of benefits, like what the other speakers have said: accessibility, efficiency, convenience, customizability, and security, and more. And digital banks and digital insurers have also proven to be effective at furthering financial inclusion and filling long-standing protection gaps, which are often more prevalent in developing markets. Regulators are also being proactive in adapting regulations to harness the upside of this innovation while managing the downsides. So I am hopeful that this will continue. The second opportunity is open data, where we have the potential to create a more open and collaborative financial ecosystem. And with the appropriate building blocks, including consent and protection mechanisms, open data has the potential to become a source of continuous innovation. And this will also lead to a financial system where collaboration is innate and consumer interest is at its core. So consumers will thus stand to gain immensely from the development of competitive offerings tailored to their specific needs without compromising their rights as owners of their data. And as an added advantage, open data would also enable the financial sector to be more adaptive towards emerging priorities such as pursuing the sustainability agenda. For example, innovations that utilize climate-related data to provide greater transparency across the supply chain will enable more effective transition by businesses and climate-positive actions by financial institutions. So together, these developments, when harnessed correctly, can address many pain points that we face as an emerging economy. What we cannot ignore, however, is that innovation also brings with it risk. And at times, this risk can be very material. Among the top worries are cybersecurity risks. These risks have only heightened as the financial sector adopts new technologies and becomes digital first. For example, financial institutions' processes have now become more interlinked with their technology providers, who typically operate outside the perimeter of the financial sector. And a chain is only as strong as its weakest link. So the need for financial institutions to ensure cyber resilience across its entire process chain is thus a pressing one. Of course, this also means that as supervisors, we must build our capacity in this area. Another concern is on blind spots that may undermine our mandates. And this is particularly relevant for developments taking place outside our purview, but may affect monetary and financial stability. And what development that may resonate deeply with many here, as what has been said before, even by you, Augustine, is on decentralized finance. So while currently its adoption is confined to niche segments, it has the potential to give rise to material risk if abused, as what Jay has said. And this will include loss of monetary policy sovereignty, build-up of financial instability, and erosion of market integrity. So the challenges managing risks associated with DeFi can also be complex. And this can be due to, first, what I call critical lack of data, which makes it difficult to identify risk transmission channels and to size up exposures of the traditional financial system. And secondly, risk of regulatory arbitrage arising from the uneven regulatory landscape globally and the borderless nature of DeFi. So given DeFi's cross-border nature, it is my hope that for there to be a closer coordination at the international level. And this would go a long way towards formulating a cohesive approach towards managing its risks as well as filling persistent data gaps. Thank you.
Thank you very much, Shamsiah, for this very complete view you gave us. Certainly, you rounded up our view with giving the emerging markets point of view. You raised the important issue of how innovation can be an instrument for development, and raised other interesting issues. For example, the importance of open data, of consent, which is key for innovation. And then you raised issues, important issues related to risk, cybersecurity, needless to say, how the weakest link can affect the entire process chain, and that's something we have very close to our minds. Blind spots, particularly DeFi, regulatory arbitrage. So I thank you all very much for this initial intervention, where you have really gave us a very interesting map about opportunities and challenges. So let's now try to go from the general to more particular issues. And so I will pose a question to each one of you, or a set of questions to each one of you, and allow you to present your views. So let me start with Andrew. Pretty much all of you have mentioned the issue of DeFi. And the DeFi ecosystem is growing at an exponential rate. By pursuing the apparent, and I underline the apparent elimination of intermediaries and promoting peer-to-peer transactions, DeFi could present unique challenges for regulators, authorities. Traditional regulatory models that impose obligations and standards upon regulated financial institutions are not well suited for the DeFi world, as Jay said, they were not designed having in mind this world. So the regulatory challenge is big, and it's compounded by the borderless nature of the DeFi ecosystem. So some relevant questions that I would appreciate very much for you to address, Andrew, is how should central banks respond to these challenges? Another issue is, do central banks need to rethink regulation and design new regulatory models to address the specific features of DeFi? And as Shamsiah mentioned, the importance of international cooperation. How important do you think this international cooperation should be? So, Andrew, the floor is yours.
Well, thanks, Augustine. I would start by saying that I think DeFi is, as you said, is a very fast evolving and fast growing area. I think we've got a lot to do to really get to grips with what it is, where it's going, and what we're going to end up dealing with, but we've got to do it very quickly. One thing I'll start by sort of rejecting, I mean, and this obviously, this point really comes out of also the crypto world, which is obviously, I think, very closely linked to DeFi at the moment, at least. And that is, there's a view, I know in some quarters, not all quarters of the crypto world, but some quarters, that somehow it's a separate world where the normal rules don't apply. It's a sort of world where there's a sort of a set of sort of libertarian principles applying, and we can sort of separate this off from the world of sort of statist regulation. That, I'm afraid, is just not realistic. It's not reality. I'm not making a political point here at all. I think we operate in one system. I think the real challenge you point to, and it picks up what I was saying earlier, is that our regulation, in a way, is rooted in a principle of identifying what you might call a controlling mind, or controlling institution and a controlling mind, and then putting out sort of regulatory hook, if you like, into that mind and that institution, and saying, as I said earlier, here's the public interest principles, here's how we turn those into rules and regulations, and here's how we supervise. The challenge with DeFi is that, as I understand it, it's saying, how far, let's use artificial intelligence to, in a sense, change that concept of the controlling mind. And I think the question that, certainly I'm trying to answer, and it's, to be honest with you, fairly metaphysical. And as a central banker, I do not claim to have, in any sense, comparative advantage in answering this question, but it's important is there a world in which DeFi leads to a situation where there isn't a controlling mind? In the sense of controlling human mind, actually, I would say. Now, my instinct is the answer to that question is no. But it's making our lives a lot more complicated to get to that answer. I think that's my answer. I do not think you can have AI that operates sort of entirely independently of the sort of the human mind, as it were. But I think it's going to make for us designing regulations that, in a sense, achieve what we want to do in the public interest world much more difficult, and we've got to come to terms with that. On your final points about cross-border cooperation, absolutely yes, because again, in a way, it's in the nature of this thing, because it's trying to sort of free up from the constraints of conventional institutional forms, if you like, that of course the cross-border, nature of it will be, if anything, I think more pronounced. If there is a controlling mind, we always have to then say, well, where is it? Where's it located? And I think that question too is going to become harder, and it's going to put much more emphasis, as we are doing in for instance, all the work the Financial Stability Board is doing on this question. We have to do it together internationally, because if we try to do it within our own locations, we're going to fail, because it will escape us, as it were. It'll always be somewhere else. Thanks.
Thank you very much, Andrew, and I fully share your point of view about the existence of controlling minds. And here in the BIS, we mentioned that we made an allusion to that in a different way by saying that there is the illusion of decentralization. So let me now move to Shamsiah. As you know very well, CBDC has been in our minds for quite some time. It's a key aspect because it goes to the core of central banking. So let me ask you a few questions on this. First, to what extent could CBDC serve as a new foundation of sound and stable public money for the financial system of the future? And second, what essential features should the CBDC have to serve as an effective alternative to new forms of private money and ensure that CBDCs would sit at the center of the financial system? I know that these questions are very broad. You have a limited amount of time, but I'm sure that you will be able to distill the more richer aspects that are involved in these questions. So, Shamsiah, the floor is yours.
Right, thank you, Agustin. The potential for CBDC to serve as a foundation for sound and stable public money is at the center of what you had said, at the center of a well-functioning financial system. However, the growth of the crypto ecosystem over the past decade does reflect some gaps in the financial system. And this gap includes the failure to adequately support financial inclusion and meet evolving user needs. So to remain relevant, public money needs to keep up with innovation. Otherwise, it risks being displaced by crypto assets as the main medium of exchange. So to this end, we believe that CBDC can be a tool to maintain confidence in public money and its role at the center of the financial system. Designed, like what you said, appropriately, CBDC can be a public good that provides fast, safe, and affordable payment services. It can also serve as a foundation where private sector innovation can thrive. However, having said that, it is also important to bear in mind that CBDC is not the silver bullet. It has to be supported by sound macroeconomic policies and in appropriate and a fit-for-purpose financial system. And this would ensure that the regulated financial system and not the shadow financial system remains the preferred and trusted avenue for the public. And as what has been said in many forums, I do agree that the key design features for CBDC to fulfill its potential must be to, one, solve the last mile challenges and be open by design. And the three recommendation and the three principles that has been recommended by the BIS and the group of central bank is something that all of us agree with, which is, firstly, do no harm. Secondly, is to support the coexistence and interoperability, and thirdly, to promote innovation and efficiency. Of importance in my mind is the principle of do no harm. CBDC issuance must not threaten monetary and financial stability. And as much as we talk about the threat of cryptalization, foreign CBDCs denominated in major reserve currencies may pose greater challenges to smaller economies. Specifically, if used across borders, foreign CBDCs may heighten currency substitution and financial disintermediation risks. And this is where international collaboration is critical. Developing a set of principles to govern CBDC usage across borders would reduce negative spillovers and support international macroeconomic and financial stability. The other point that I would like to stress is retail payment systems are also an equally compelling alternative. So CBDC is not the only tool to preserve public money at the core of the financial system. Retail fast payment system can be equally effective. To date, about 60 countries have implemented such systems. And on the contrary, only 3 countries have launched their retail CBDCs. So the benefits of instant and round-the-clock payment in the domestic domain can be extended to the cross-border space. And this can be achieved, for example, via interlinkages of retail payment systems across countries. So the project Nexus, led by the BIS Innovation Hub, immediately comes to mind. So we are happy to participate in this project, which aims to test the viability of connecting retail fast payment system on a multilateral basis. There is this opportunity to reap the best of both worlds. And it is worth, I think, Augustine, for us to explore the idea of converging Project Nexus with other multi-CBDC projects, such as Project Dunbar. A multi-CBDC network could complement a global network of retail fast payment system through efficient back-end settlement in central bank money. So aside from enhancing hard infrastructure, it is also important for regulators to enhance what I call the soft infrastructure. And some of this could be, looking at the feasibility as to how we can simplify and streamline regulatory processes, such as KYC, also sanction screening, and to solve frictions in cross-border payments. So I will stop here, Augustine.
Well, thank you so much, Shamsiah, for your points of view. It's key what you mentioned, bringing back again the principle of no harm in CBDC, the tremendous importance on interoperability. But also, I think it was important to remind us that many developments are taking place in the non-CBDC world, like fast payment systems, which are extremely important. And in a way, I think in many respects, this can be the answer for many of the challenges in the future. Let me now turn to Joachim. You mentioned digitalization is reshaping the financial landscape in ways that are both far-reaching and profound. So it will be interesting to see how this is playing out in Europe. So a very particular question is, how is the Eurosystem addressing the different aspects of digitalization? And could you describe what initiatives are being contemplated in this regard? It's a very broad question, but if you can sort of highlight for us the key aspects of this. Thank you, Joachim.
Thank you very much, Augustine. I try to do my best here, but let me say one sentence here at the beginning. I believe that the central bank world will change tremendously over the next years, and I'm very much convinced that central banks need to keep up with the pace of digitalization, and I guess we have to speed up here, not just keeping the pace. We need to exploit technological opportunities and rethink many of our processes. So let me highlight, and this was one of your questions, let me highlight some examples of how we in the Eurosystem and particularly at the Bundesbank are doing this. Firstly, and I guess this is one of the things we are doing in the Eurosystem, we are doing this often in a joint understanding. So together with our colleagues from the Banque de France and also in this case with the BIS, and we are really happy and proud to be part of this initiative. We are going to open an innovation center with locations in Paris and also Frankfurt. This will help us to develop target-oriented, innovative solutions with a keen sense of curiosity and a great deal of creative energy. Secondly, in conjunction with other Eurosystem central banks, we are conducting a so-called proof of concept entitled Distributed Systems. This project aims to establish a new collaboration model for an integrated system for reporting ESCB statistics based on a network approach. Also, we are setting up a state-of-the-art multi-cloud network that will allow for a distributed data storage architecture. And this cloud ensures symmetric data access and also interoperability within the heterogeneous landscape of IT systems. And thirdly, the Bundesbank is also working on the efficiency of its own databases. We are improving our data handling with a high-performance integrated data, and this is a kind of an analysis platform, and are setting up a large project to take advantage of the benefits of cloud services, and also to promote digitalization across departments within the Bundesbank. We have formed an interdisciplinary committee that supports ideas from an early stage on. This ensures that we make constant progress on our digital agenda. And as I discussed earlier, cybersecurity is one of the major challenges that we are facing and therefore has a high priority for the Bundesbank. The Bundesbank, as part of the Eurosystem, supports also banks, insurance companies, financial market infrastructures, and key service providers in putting their cyber defense capabilities to the test with hacking simulations in what we call cyber tests. This is a specialized IT provider attacks companies that attacks critical functionalities just as their criminal counterparts would do. A successful cyber test provides these companies with information on how attackers could successfully breach their defenses, enabling them to close any gaps and enhance their cyber resilience accordingly. Finally, I would like to mention our digital currency project. As you already know, the Eurosystem is currently conducting an investigation phase for a central bank digital currency. A digital euro would be issued by the Eurosystem itself and could be used by individuals and companies. As a supplement to cash, it would allow access to fail-safe central bank money in digital form, thereby increasing the choice of means of payment. What I would like to emphasize here in this regard is that a digital euro could also help to solve some of the problems discussed earlier. For example, a digital euro would combine digital usability with a high degree of data privacy, as the Eurosystem has no commercial interest in user or in the use of the data or maybe the behavior behind this. Also, a digital euro would interconnect different networks and avoid walled gardens. I'm convinced that the digital euro will be a major opportunity to help shape Europe's digital future. I think the main lesson to be learned here, maybe just a final sentence, but we can stop here because the time is also running out, and let me stop here.
Oh, okay. Well, thank you very much, Joachim. You have given us a great view of what is going on with the Bundesbank and in the context also of the Eurosystem. You mentioned the center, BIS Innovation Center, that we are putting in partnership with with the ECB, the Bundesbank, the Banque de France, and we're very pleased to have these efforts as we have with the Bank of England, with the Fed, with this strategic partnership, and also the participation of Bank Negara Malaysia in some of our projects. Now, let me move to the final question, and it's to Jay. We have mentioned many different aspects of the relationship with innovation, financial systems, central banking. Too many aspects, too many directions in which things are moving. So sometimes it's difficult for all of us, and I would say also for many members in our audience, to get a picture of how the future of the financial system would look like. And if there is somebody who can have that vision, or at least as close as possible, is you, Jay. So let me ask you, what do you believe the financial system will look like in 5 to 10 years? And what role will central banks play within it? And well, of course, the role of central banks in this vision. The floor is yours, Jay.
Yes, thank you. So I guess I need to start by saying that I think anyone's ability to say with confidence where the financial system will be in 5 or 10 years is roughly on a par with King Canute's ability to control the tides. But I do think there's some things that we can say about the direction of travel, and I'll mention 3. First, there will be improvements to the financial system that will lower costs, increase transparency, and ease access for more people. It seems, we mentioned FedNow, others were mentioned. It seems like that's a certainty, or close to it. Second, it's highly likely that digital financial activities that are currently outside the regulatory perimeter will find their way, will be brought within it, which is necessary to level the playing field, keep the trust of users, protect consumers, and all that. And the third thing is that I think that a lot of the progress that we make along this road will depend on really high levels of international collaboration if we're going to really unlock the potential of digital assets and services while avoiding the pitfalls. So if I can just briefly expand on those, I think we're well on our way to a world of instant, low-cost domestic payments here in the United States and around the world that will be available 24/7, 365. And I think on the path with work to do to achieve the same for cross-border payments as well. Here in the United States, as I mentioned, the FedNow service is set to go live in 2023. Turning to the regulatory umbrella, as I mentioned, I am confident that that'll happen. And here in the United States, to get us there, President Biden this month signed an executive order to ensure responsible development of digital assets to protect consumers, financial stability, and national security. So this order calls for a coordinated government-wide approach to address regulatory gaps related to digital assets and will complement the Fed's ongoing work on CBDC. It doesn't focus on any particular aspect, but tries to take a holistic look at the digital finance landscape, and it's very welcome. So for our part, we're looking, as others are, at addressing regulatory gaps around digital assets and how they will work in the banking system. We're working with our sister banking agencies on that. In addition, the President's Working Group, which is a body we have here that is under Secretary Yellen's leadership, has just issued a report in November on a regulatory framework for stablecoins used for payments, making several recommendations in the U.S. context. First, to require that stablecoins that are used in payments be issued by insured depository institutions. Also, that custodial wallet providers be subject to appropriate federal oversight, in addition to what currently happens at the state level. And that stablecoin issuers will comply with limits on their affiliation with commercial entities, which, as Joachim mentioned, is really a key feature here of what we need to do, I think. So in terms of our role, central banks will need to continue to play a key role for us fostering a safe, efficient, and widely accessible payment system with a trusted form of money at its core has really been a crucial aspect, if not the crucial aspect, of all of our missions since our founding. But we'll need to evolve with the rest of the financial system by staying at the forefront of technological changes. To do this, we are engaged in research and experimentation on our own and with partners related to payment technologies and digital currencies. We are hiring people with that kind of expertise at a greater rate, and this is something we will be investing time and money in over the coming years. Finally, on international collaboration, we're actively engaged with other central banks and international partners in moving the G20 cross-border roadmap forward, which carries the potential to address the well-known and unfortunate frictions in international payments. We're collaborating with 6 other central banks at the BIS on central bank digital currencies, sharing our analysis and finding consensus on some foundational principles. So our collaborations will extend beyond these areas to cover the whole digital landscape, including stablecoins, unbacked crypto assets, and other areas of financial innovation. We are dedicated to working with our domestic and international colleagues on making sure that the payment and monetary systems evolve in a responsible way that brings about improvements while also maintaining safety and soundness and financial stability. I'll stop there. Thanks, Agustin.
Thank you very much, Jay. And I think this is a perfect way to end with this vision. I will not attempt to summarize because each one of the commentaries given here have been essential, and I think there is no hay, everything is substance. So I thank you all very, very much. If I have to say a closing remark, I would say that at least from what we have heard from our panelists, central banks and central bankers are all for innovation, but always having the guide of the public interest in mind. I think that is what we need to do. That by itself is easy said, but not that easy to implement, and precisely our challenge is to find the path into a much better future, which I'm sure will wait for us with an adequate combination of innovation and financial technology. So thank you all very much for your time. It has been a pleasure to have this debate for you. All the best.